Welcome to DebtCircle Key Roundups. I am Vijendra.
And I am Leela.
We've got a packed show lined up with some major developments shaping India's financial and debt markets.
Absolutely, Vijendra. From SIDBI's rural MSME lending push and Tata Communications raising rupees 300 crores through commercial papers to rising swap rates creating fresh opportunities in floating rate bonds, there's a lot happening across the financial ecosystem today.
Let's begin with SIDBI. SIDBI is partnering with regional rural banks through a co-lending framework to expand affordable credit for rural MSMEs, following Finance Ministry directives and a successful pilot with 3 RRB branches. The collaboration is now set to scale to 23 branches, significantly strengthening credit access in semi-urban and rural regions.
And what makes this especially important is SIDBI's larger expansion strategy. The institution is growing from 96 branches in March 2024 to 166 branches by March 2026, covering 196 MSME clusters and targeting direct finance generation of rupees 4,000 crores. Alongside that, SIDBI also plans to build 500 industry collaborations, deepening support for MSMEs and accelerating rural economic growth.
Moving to corporate funding now, Tata Communications has raised rupees 300 crores through commercial papers issued on May 22, 2026 at a discount rate of 7.27% per annum. These papers mature in 3 months on August 21st and are aimed at supporting the company's short-term liquidity requirements.
Yes, and the structure is quite strategic. The papers are listed on the National Stock Exchange, improving transparency and investor confidence. Each security carries a face value of rupees 5 lakhs with ISIN, INE 151A14297, and the issue is structured purely as a discount instrument, helping Tata Communications optimize working capital efficiently without affecting long-term debt plans.
Now, one of the biggest stories in debt markets right now is the sharp rise in floating rate bond issuances. Since mid-May, Indian issuers have already raised 64 billion rupees through floating rate bonds, largely in 3-year tenors, as swap rates climb to multi-year highs. Cholamandalam Investment and Finance is also preparing a 50 billion rupee issue that could become the largest local floating rate bond issuance so far.
Exactly, and investors are taking advantage of overnight index swaps to convert floating rate returns into synthetic fixed returns. Market pricing is currently anticipating 125 basis points of rate increases over the next year, and this strategy is generating an additional 75 to 100 basis points over standard bond yields. For issuers like Cholamandalam and Muthoot Finance, floating rate borrowing also helps align liabilities with floating rate loan income, improving balance sheet stability.
Let's talk about sovereign gold bonds now. The Reserve Bank of India has fixed the premature redemption price for sovereign gold bond 2021-22 Series 1 at Rs 15,840 per unit, delivering nearly a 235% return over 5 years for online investors, excluding interest payments.
That's an exceptional performance. Investors originally subscribed online at around Rs 4,727 per gram, and along with the annual 2.5% interest payout, these bonds have become one of the strongest low-risk alternatives to physical gold. A 1 lakh rupee investment is now worth nearly Rs 3,35,000 before interest, without any storage or purity concerns.
Staying with alternative investments, JM Financial Asset Management has launched its second performing credit fund, JM Financial Select Credit Fund 2. It's a Category 2 alternative investment fund with a base corpus of Rs 1,000 crores and a greenshoe option of another Rs 1,000 crores.
And this reflects how quickly India's private credit market is evolving. The fund focuses on lending to financially stable companies with strong cash flows and credible promoters, while leveraging JM Financial's integrated investment banking and credit capabilities. With Category 2 AIFs already accounting for commitments worth Rs 11,64,000 crores, this move positions JM Financial strongly within the growing private credit ecosystem.
But as India's private credit market expands, concerns around liquidity and defaults are also becoming more visible. In the unlisted debt market especially, liquidity can disappear quickly, and trustees are becoming increasingly important in monitoring covenants and managing stress situations. Right now, more than 20 unlisted defaults are already under active management.
That's the real test of market resilience. As India shifts more financing away from traditional banks toward bonds and private credit, transparency, enforcement, recovery mechanisms, and investor protection become absolutely critical. Trustees are effectively the first line of defense in maintaining confidence when stress hits the system.
Let's move to Sundaram Finance now. The company is aggressively diversifying beyond vehicle loans into gold loans and MSME financing. while also expanding geographically outside South India. They've added roughly 55 to 60 new branches, largely in North India, to reduce regional concentration risks.
Financially, too, the company looks very strong. Sundaram Finance reported a consolidated net profit increase of 10% to rupees 2,059 crores in fiscal year 2025 to 2026, while standalone profit rose to rupees 1,834 crores. Asset growth came in at 16.4%, and gross non-performing assets improved to 2.14%, reflecting disciplined risk management.
Infrastructure financing is also seeing major momentum. Indian Railway Finance Corporation Limited has signed a 20-year loan worth Rs 13,527 crores with Larsen and Toubro Metro Rail Hyderabad. The refinancing replaces higher-cost debt and supports Hyderabad Metro Rail's nearly 70-kilometer urban transit system.
And importantly, the structure is highly attractive. The loan carries no processing fees or prepayment penalties, while support from the Telangana government and Reserve Bank of India backed arrangements significantly reduce risk. Hyderabad Metro already serves more than 500,000 daily passengers, and this refinancing could become a template for long-term urban infrastructure funding across India.
Another major corporate development comes from Phantom Digital Effects, which has revised its compulsorily convertible debenture issue to Zee Entertainment at a price of Rs 213.93 per share, totaling approximately Rs 115 crores 70 lakhs.
The revision aligns with stock exchange regulations and ensures Zee Entertainment's holding stays below 25%, avoiding a mandatory open offer. At the same time, promoter ownership will decline while public shareholding rises, indicating a meaningful shift in ownership dynamics and investor participation.
Meanwhile, Paisalo Digital has redeemed 10 unsecured, unlisted, non-convertible debentures worth Rs 1 crore from Series PDL-09-2023, well before maturity, exercising its call option ahead of the scheduled maturity in September 2033.
That early redemption reflects proactive debt management and stronger balance sheet positioning. Investor confidence also remains robust, with the stock gaining roughly 45% over 6 months and delivering more than 64% cumulative returns over 5 years.
Let's turn to monetary policy and municipal finance now. The Reserve Bank of India is expected to keep interest rates steady until at least December 2024, despite inflation concerns from fuel prices and monsoon uncertainty. Inflation for fiscal year 2026 to 2027 is projected at 5%, while fiscal deficit estimates have widened to 4.7% of GDP.
At the same time, the Brihan Mumbai Municipal Corporation is preparing its first ever bond issue worth Rs 1,000 crores for fiscal year 2026 to 2027. With a AAA credit rating, the bonds are expected to offer yields between 8 and 8.25%, potentially even lower. This could become a landmark moment for India's municipal bond market and encourage more urban local bodies to access debt markets for infrastructure financing.
And finally, Indian government bonds are showing signs of strength as Brent crude remains below $100 per barrel and US Treasury yields soften. The 6.48% 2035 government bond is expected to trade in a yield range of 7.00 to 7.06%. But with rising US-Iran tensions and oil prices climbing again, markets remain cautious. Overnight index swap rates between 6.15% and 6.67% continue signaling expectations of tighter monetary conditions ahead. That's all for today's edition of the DebtCircle podcast. Thanks for joining us.